All right, guys, let's go ahead and get started. Give me an audio check. Let me know how everything sounds, and we'll get right into the live stream. So, if we're going to go through. I'll start off. We'll go through the broad market, kind of look at where things at. I can touch base on Tesla and Netflix because those were the two major players that reported earnings last week. They both missed expectations. Again, it's not necessarily we don't care about expectations. We just care about what the market does. So does with with whatever they say. So we'll look at those, and then we will. I'll just get into your guys' picks that you want me to look at. So, okay, broad market, triple Qs. We'll look at that. We'll look at the futures. I can take a look at the SPY, but in general, I mean, everybody knows that this rally that we've been in since the beginning of the year is pretty much 7 stocks. It's the FANG stocks. It's it's Nvidia, Tesla, Microsoft, Apple, Google, Amazon. It's those players. Facebook or Meta has a role there too. And that's it. Most of the rest of the stocks in the market haven't really been rallying. So it's not a broad-based rally. It's a very thin breadth. Not a healthy rally. Doesn't mean that we can't, if the rest of the market starts to rally and the FANGs kind of hold up, okay, that would be, that would be an improvement in breadth. So obviously we'll take a look at that. But triple Qs on the hourly chart, all right, we had this little uptrend line. We broke here and we're heading down. So in the short term, I think we're heading down, at least on the hourly. There's negative divergence telling you. So you look for those divergences in a trend to tell you that a trend reversal is likely. So we didn't have the divergence till about right here, okay, when you made a new high in price, and that's where the divergence showed up, and then there's your trend reversal. So, yeah, that's it basically. I think there's probably a little lower prices to come on Monday. I could see us gapping down, maybe right down to here at about 373-ish, 372.90, fill that gap, and then maybe get a little bounce there. That's completely possible, and I'd say that's probable. So keep an eye on that level, 373. Gap down on Monday. If you open down around there, you're opening at support, so you're likely going to have some dip buyers stepping in. And that's really it on the hourly chart. Let me roll over to the daily. On the daily here, so again, we're just talking, and you can see here that 373. There was a reaction high right there, and another one right there. All right, so you're gonna have dip buyers there for sure. You will. Do we go on to make a new high? I don't know, to be honest. I don't think so. I think we're probably going to continue to break down, but I can easily see a bounce there. We've got negative divergence on the daily chart as well. Let me kind of clean this up. I've pointed it out in multiple videos. It's really a big divergence. I mean, ultimately you have divergence right here. So this is back in February, and every new high has not made a new high in momentum on the PPO. On the RSI, you can say that it did, kind of burn through it. But on the RSI, you now also have negative divergence right there. Okay, so we have dual negative divergence, and if you don't, even if you don't like this divergence here, all right, you do have it right there. All right, new high in price on the daily, while lower high in momentum. And then you also look at the PPO, you've got that crossover that's taking place, bearish crossover right there. So helping confirm that divergence. So that's there. So I think it's a sell the rip. I think tech is a sell the rip. And, again, I can see a bounce coming at that 373. I think you sell into that. And I think we head down to this trend line. That's your major trend line that's the uptrend. So you're going to have bulls there, for sure. You're going to have dip buyers and bulls there. That's been the prevailing trend all year. So likely that's where you're at least going to have some buyers down at that trend. All right. Until that breaks, there's no major sell signal for shorting. I think you can short down to there, but down there, it doesn't make sense to be short. And you could go long. I'm not going to go long because I don't like there's negative divergence. So I think you get a little bounce, and then ultimately I think that trend line breaks. But until we see it, there's no reason to, we need to see it. That's our sell signal. That's when we take action. At least that's when I take action for a major trend. All right, that's it on the NASDAQ. Let's look at the futures, see if there's anything different. Futures basically kind of at like a minor support level. And again, it's kind of consistent with that 373 on the triple Qs. There's this uptrend line right here. So we're at like a minor support. I think you maybe get a small bounce here. But ultimately, the bigger trend line is right down there. All right, that's your major trend line. That's a nice clean trend. So yeah, I think we head down there, and that's where the buyers are going to be at. All right, when you break that, which I do believe we will, but when you break that, you'll that will be a more longer term sell signal. Until we see it, we don't have it. So that's it on the NASDAQ futures. What else do we want to look at from the broad market perspective? Let's see here. Obviously commodities, DJP, and we'll look at interest rates too. It's important. So here's DJP. Again, this is your broad-based commodity index, bullish falling wedge. Okay, a little breakdown there, but ultimately looks like it was a false breakdown, and you had bullish divergence. The big bullish divergence, building in this big bullish pattern. It's now broken out. All right, that's a breakout right there. All right, and so commodity prices should continue to rise. They don't, you're not going to go straight up. You're going to have pullbacks along the way, but it's by the dip. All right, that's the way I view it. With the bullish divergence, bullish pattern, and a breakout, it's by the dip. That's what we look at. So as we fall to support, we'll look to buy. Now, where's the uptrend line? I don't know. Maybe you've got the start of one right here. It's hard to say, if that's actually, I only have 2 data points, 1, 2, so I can't say that's a trend line. So we need to, it's got to, this has to develop some more of this uptrend. Right at the 200. So yeah, I can see a pullback here, but again, it's by the dip. So, and then as commodity prices continue to rise, I mean, this looks like a big first leg up, correction in an ongoing bull market. All right, continued higher. And as that, if that's true, if commodity prices continue to rise, it's going to put pressure on the Fed to continue to hike interest rates. The narrative in the like on TV and probably just a lot of people, the public, they just will repeat the narrative that they hear on TV because that's basically just how it goes. The narrative right now is obviously that we're in a new bull market, that inflation, the Fed's done hiking, and inflation is contained essentially and will continue to fall. If anybody knows what's going on with that, there was this base effect thing. I don't completely understand it, but ultimately, the way they evaluate the rate of increases is based off of based off of the previous kind of comps, basically, the previous comparative rates from a year ago. And I guess that we've run through that period of time, and so now inflation should continue to rise. Inflation's at 4%, guys. The Fed's target's 2%. So ultimately, that's still a ways to go. So we'll watch that. That's fundamental stuff. But ultimately, the technicals tell me that that commodities should continue to rise, and then ultimately that should continue to engage the Fed on, at least in rhetoric, their rate hikes, and then the market will trade based on what they say. So. That's what I see on that one. And then interest rates, TNX, 10-year interest rates. Look, we're still holding trend. We got a bullish trend in interest rates. Rising interest rates are negative for the stock market in general, and they're negative for tech especially. But they're negative for pretty much most stocks. You don't believe me? Let's go ahead and look at the monthly chart. All right, here is the monthly chart. Here's interest rates going back since 1981. All right, 81. There's a nice bearish channel of interest rates falling since 1981. Here's COVID craziness. And each one of these drop downs, the reason why I have this channel here, each one of these drop downs where it broke below the channel was Fed intervention. All right, this was your operation. This is your QE1 to Operation Twist, and here's the Fed. We all know what they did there. And look where we're at now. We're above this channel. This pattern since 1981, you know, going back basically 40 something years, has now been broken, and we have a new pattern, which is rising interest rates. And if you look at the stock market, I think I can do the SPY. Was the SPY around? No, it wasn't. I have to go to the S&P. Let me find that one, guys. There it is, SPX. S&P 500. Here's basically, yeah, all right, here's 1981. All right, so you can see the stock market will rise over time because in general, the Fed does inflate the money. But you can see since about 1981, look, we were kind of stuck in a sideways range for the entire 70s. That's an inflationary period for sure. Oh, not my fibs. But then the Fed said, oh, I'm going to start, you know, dropping interest rates. And when they did that, market likey, right? Okay, so that's it. That's the broad analysis. All right, and so let's go ahead and, you know, that's basically it. So TNX, go back to that one real quick just to show you guys on the daily chart. Interest rates started rising when COVID, at the lows of the COVID lows right here. All right, that was the low in interest rates when the Fed basically pumped, you know, was buying corporate bonds and all kinds of bonds. And we have a pattern of rising interest rates, which has not been broken. Now, and I don't even really see divergence either. Let me kind of clean this up, and I'll just, you know, this is really important stuff because it kind of helps build a thesis on what's going to happen in the future before it shows up. And that's how you make money. You got to anticipate, read the charts of what's going to happen before everybody knows it, right? You have a downward sloping momentum. Basically, momentum has been dropping off, but so has interest rates, all right? You've got this was a divergent high here for sure in interest rates, and we've had a correction, and we have not made a new high in interest rates. All right, lower high, lower momentum. So it's not diverging anymore; it's converging. You basically have momentum moving with price, or with the numerical value, and so no divergence there on that one. So again, go with the prevailing trend. That's all we can do until we see a change in trend, and that is higher rates, which should continue to put pressure on the market. That should shift the narrative, but by the time the narrative shifts, it's too late, all right? The money's usually been made by the time the narrative has shifted, so that's why we look for, you know, that's why we use the technicals and try to find opportunities in the technicals. All right, that's it on that one. Anything else? I think that's probably good on the broad market. So let's get into your guys' stock picks, and then we'll wrap up. We've got Netflix. So on Netflix, yeah. So here's what I see. I mean, we're still in the upward price channel, and so there it is, upward price channel. I do believe we're heading to the bottom of that price channel. We have negative divergence right there. So this little spike high. They just pumped this thing right ahead of earnings. All right. When you see that, when you see like a pump right ahead of earnings, you know, especially if it has negative divergence, yeah, that's usually a tell. So there's your divergent high, and boom, you know. So we're very likely, very probable to head down to the bottom of the channel. We're right in the middle of the range. You maybe get a little bounce here at this little reaction low, but ultimately you head to the bottom of the channel. And then we'll see, you know, until we have a break of the channel, it's still in an uptrend. So, yeah, that's really all that I have there. Pretty decent resistance where it traded up into. I mean, look at, you've got all these reactions here, and it traded up into there. So that's big resistance. So I do think we're going to head to the bottom. I do think we'll break that channel, and I do think we'll start to head lower. But first things first, head to the bottom. We wait to see the break. Once you see the break, that's a sell signal, an additional sell signal, and you should start to trend lower for like a swing trade. Kyle, appreciate that, man. Thank you for the super chat. Yeah, I will get to I'll get to yours next then. Triple M. Now I know that was a bullish setup. Let's take a look. Yeah, so you've got bullish divergence there. All right, see how it's building. All right, you've got lower lows. These are divergent lows. There's a little washout move right there. Quickly recovered and still holding that trend. So that's definitely bullish to see that. Price action's not bullish necessarily because it kind of continues or has made divergent lows. Divergence isn't the reason to go long though. You know, you want to buy at support or breaks of resistance. So if you have divergence, you can buy at support. That's objective. Or you can wait till you break resistance. That's objective. You don't just buy or sell because you have divergence. So, you know, you buy here, you could buy it at these support levels. You're not really underwater. If you were buying at these little support, these tags of support, you're probably profitable, really, or close to. And earnings coming up, the chart's set up bullish, so I would say earnings pops, all right? And I think we go up to the 200 and to this downtrend line. I don't know if it happens on earnings, but maybe shortly after. Ultimately, it looks like this stock is headed up to this range right up in here, 112 or so. It's a gamble because earnings is always a gamble. You know, the chart is set up bullish, but if earnings somehow comes out and it's a surprise miss and the market doesn't like it, it can kind of negate the technicals. So, act accordingly. Take the risk that you're comfortable with if it goes against you. But the chart is set up bullish. So if I had to guess, which is what it is, I would say we're going to pop up to this area, hit the 200, probably spike up and hit this downtrend line, and then from there, I don't want to be long up here into resistance. I would want to get out of my longs and wait for a break if that's going to happen. So that's, yeah. So, I mean, that's it. You've got, what is this? It's about 8-9% or so, 8%. Depends on how long it takes to get up there, but yeah. All right, let me move on. UNG. So that's nat gas. I haven't seen, it looks bullish, but I just haven't seen like a clear enough buy signal on this one. It does look like it for sure looks like it's bottoming. Look at that bullish divergence. Building. This is gonna, and nat gas does just explode. That's kind of how it trades. It just plunges and explodes. So it definitely is set up bullish. As of right now, I would be, like, personally, I'm kind of waiting for a break above this resistance line right there. It's about 780-ish. Nice impulsive breakout above there should set this up for a kind of that sharp move up. It should head probably right up to the 200-day and this resistance right up here at about 1160. I just haven't seen a buy signal. It's definitely basing and building. But there's just no real clear buy signal yet. So, all right, that's what I got on that one. Let's see here, Roberto. Let me see what you got. Pins. Let me spell it right. All right, so on pins. Can't quite make a clean downtrend line on that one. Maybe you got something like that. It's just I can't quite draw it very clean, so I have to just get rid of it. So earnings coming up next week. Obviously, it's always a gamble, guys. I mean, if you're loaded up on a position right into earnings, there's definitely elevated risk there. This one. I'm mixed on it. It's likely going to trade with how tech trades. But, you've got this uptrend line right there. It's kind of at support right now. So you could still bounce. You're at support. So you're probably going to bounce at least off this support level or August 1st is when earnings. So, you know, I would think you're going to bounce here. I don't see divergence completely. I mean, there is divergence. You know, there is a big divergence here, right there. But, you know, I don't know. The market's going to go where large cap tech goes, just like you know, that's what we want to watch, especially this stock. You could also look at like maybe ARC, might be a tell on some of these things. Let's check that one out real quick. See, so ARC has negative divergence here, and still holding trend. Let me this trend actually, we really need to probably tighten it up and make it like, see, if you only have 2 data points, it's just not a confident chart. It's hard to say, oh, this is a nice clean trend. On this one, I'll probably go with something like that. We're still holding trend. We have divergence, no sell signal. We hit resistance right there. Well, got close. You could see another spike up into it. Nothing I want to short. I don't want to short this. Not right now. I think there is a short. It's setting up for a short because you have divergence. Looks like you're about to get a bearish PPO crossover, but there's no sell signal, no break of trend or anything. So, yeah, that's kind of how I feel about pins as well. You know, I don't want to short it. You could bounce here. You know, take the risk how you want ahead of earnings. Verizon. Okay, so Verizon, this is a steady Eddie dividend payer, but don't be fooled by a dividend, guys. You know, you can downtrend and lose all your money in price, even though it's paying a dividend. Let's take a look, though, and see what this thing has. Bullish divergence, for sure. All right, building, and it's still there on the RSI, at least. Not really there on the sorry, it's on the PPO, but it's not on the RSI. It does look like you know, you didn't really have it there. Kind of had it a little there, but you don't have it on the RSI. So mixed on our indicators, our momentum indicators. Earnings coming up, you know, who knows. You've got a downtrend line right about there. All right, that's pretty clean. Yeah, lots of reactions. You can see 1, 2, 3, 4. All right. So sorry, click the wrong button on the mouse. So multiple reactions on the downtrend line. Probably go with that. Hold on. Yeah, I don't know. I don't really like this lower trend line. The upper one is good. All right, I like that as resistance. 1, 2, 3. That's close. And 4, 5. We're right in the middle though. So I just wouldn't take a position ahead of earnings. You know, if you trade into resistance, I think that's shortable. You know, down here, I don't know. I'm not so sure. But you're right in the middle, so I just, you know, wait till earnings is out of the way, and then, you know, you could get positioned after that. Okay, what else do we have? CAG or CIN? CIN, I think I know that one. Is that an oil one, or what is that one? CIEN. Oh, this is an ag one? Oh, Telecom. Okay, Telecom. I know there's a couple Telecom requests. So I've got this as the downtrend. I like that. You got multiple reactions to validate that. Can't really make a isometrical triangle. Maybe, yeah, we'll go with that. That's fine. You've got 1, 2, 3. Okay, I like that. Isometrical triangle is an indecision pattern, so that can break either way. Let's see what the divergences tell us. No real divergences either. You can just see we're just kind of compressing in momentum. It's the same with momentum. Isometrical triangle on the momentum. So I don't know. You're probably going to trade up to the top here, you know, but you could do this and then go. there's no indication of a buy or a sell signal, no indication of which way this is going to break right now. So you just have to wait for the breakout or breakdown for the next tradable trend, I believe. So that's that one. Rare. What's rare? Pharmaceutical or tactical. Yeah, it must be this one. So this is one that you had me look at last week. It's at there's no change, right? So, you know, you can pause the video, go back, rewatch it, and redraw these. You know, if you think my trends and levels are right, then redraw it. If you don't believe in it, then don't. But right now it looks like there's no change. You're kind of sitting there at support. There's no real bullish divergence though. You just have bullish momentum, bullish price action. You had this is your downtrend. To me, it looks like a breakout and a back test. It looks like you're trading at support. However, you got earnings coming up. They could gap it down to this trend line. That's the objective area to go long, the most objective. It's objective here. It's more objective here. So if you like it, if you like this thing long and you like it here, you should like it more down here because the setup's still there, but it is a 12-13% drop. So plan accordingly on your position size, especially ahead of earnings. But if you could buy it down here, that's bullish. All right, that looks like a good spot to buy it at to me. So keep an eye out for that. I'm going to move this over to my long trade. It is a very clean chart, so it's good. I mean, you have a nice clean downtrend line. You have you don't have bullish divergence, but you had it right here. Look, boom, momentum's moving up. Higher high in momentum, lower low in price indicates a trend reversal. This is a breakout. To me, this looks like a long, all right? I just don't know if I want to buy it right here, right ahead of earnings. I'd prefer, in a perfect world, I'd like it to gap down on earnings and I can buy it right down here. All right. All right, that's that one. TAN, so that's our solar ETF. Go like this. There's a downtrend. Right there. And you see you spiked it intraday right here, but see as soon as they spiked it, boom, sold it right back below, closed below. So it's still a clean trend line. So that is a downtrend. And that's it. It's a downtrend. There's another rejection right at the 200 and that downtrend, and it's no wonder it got sold into. Other people saw this too, and it's down 4 or 5%. So I don't see any indication of a trend reversal on this one. Yeah, I don't. I just see a downtrend. So yeah, I think we just continue lower. And you can break out, like look at First Solar. That's probably a big component of this. What was the other one? Sunrun, I think. Run, maybe. Look at the components. See if the charts align with the index. But look at that. See, there's my downtrend. I had this. Look, I had this trend line. I just drew it out, and it just ran right into that resistance. This one does have bullish divergence here. These are divergent lows. Divergent low 1, divergent low 2. So maybe it's going to reverse, but no buy signal. There's no breakout. You're at resistance. You break this trend, that's a buy signal. All right, URN, is that a uranium play? URNM, sounds like uranium. Uranium miners, okay, let's look at that one. Probably an inflation play, all right, so like DJP would be something I'd watch. So this spike low to me looks like a divergent low. It's relatively, it's close to these closes here, and you have bullish momentum. So that's why it looks like it just, false breakdown, sharp reaction higher. And you've got bullish divergence from way back here, building. So your divergence really that's divergent low right in here. All right, and you rallied. And yeah, it looks like it's in an uptrend. That's what I'd have to go with. Looks to be like in an uptrend. So this is very similar to that DJP chart. Look, you've got kind of this move. I don't know when this started, back in 2020. Then you got a correction, and it looks like it's going to continue a bullish trend higher. And when I go back to DJP, it's very similar looking. Run, correction, and it looks like it's continuing. So inflation trade looks like it should continue to rally. Now, URNM, you know, if you're in a bull markets kind of grind higher. Day in and day out, they kind of tack on consistent gains, but they're not usually explosive, not till the very end when the crowd gets involved. So, you know, bear market rallies are explosive because you've got shorts covering and you got people piling in and bottom fishing, and they're you know, very explosive. Bull markets are kind of a grind. But if you're long, you know, that's what you want to see. Wheat. All right, let's check that out. So wheat and ZW are two that you want to keep an eye on if you're in this trade. I'm in it. I'm long, and it looks good. Bullish falling wedge, bullish divergence, breakout, back test, rally, little pullback. I think the buyers are going to step back in. You've got a gap right there too. So maybe you fill the gap, you know, early next week or so. You know, there's support is right down. There's a gap, and basically support's right down there at about 675. So, yeah, you could see that. I don't think you're going to get another back test of that wedge, but it could come down like that and then, you know, rally. So that's the way I'm positioned, and I do believe this will continue higher, just like DJP. If the broad DJP is looking bullish and rallying, this wheat's going to do the same. It's part of that, so most likely. All right, Dish. So this is bottoming. At least it looks that way. You've got bullish divergence building. Okay. And you've got earnings coming up. I suspect earnings are going to be bullish. There's no guarantees, but because what it could do is make a new divergent low, but you've got, you know, that's a divergent low, divergent low, divergent low. If earning comes out bad, maybe they gap it down here and put in another divergent low, but it should get bought up. So what I'd look for is, if it gaps down, does it get bought up? That's your tell, all right? That would be the tell. Otherwise, if the earnings come out bullish, you're probably going to gap up you're probably going to move. I don't know if you're going to gap up that high, but how high would that be? No, that's 50%, but you're probably going to start to trade higher up into the 200-day, all right? And yeah, and then there is this long-term downtrend right here. So you could rally and continue to rally up into that long-term downtrend line. If I had to pick a direction, I'd go bullish, and I'd be long right here. I don't want to do it right ahead of earnings. I'd prefer to wait till after earnings. And that comes at a cost, because sometimes they gap it up and you miss a good entry point. So if you like this and you're long, you could always take a partial position and add to it. That's one way to mitigate risk. All right, that's that. APLD. What is this stock? Financial conglomerates. Never heard of this one. Oh, Applied Digital. So you have momentum dropping. That's obvious. And you've got divergent high, divergent high. Each time those divergent highs show up, they get sold into. All right, that's behavior we want to look at. I'd probably have to go with that uptrend line there. Yep, I like that one. This thing just came public. It's kind of a junk stock. $7. It's just lower priced, so higher risk. You've got a gap to fill, so I would say very likely you're going to come down to this trend line and fill this gap. All right, that's support. You've got the uptrend line, and you've got gap support right there. So I would put that, that's where I think it's going, to be honest. I think you come down, you're probably going to gap down on earnings or something, but ultimately come fill that at about 370. So, and that's a big drop. I mean, a move down to there that we're talking about a 50% drop. So this is a higher risk, kind of higher beta kind of play. So position size accordingly, according to your risk, level, because it can always gap up. All right, let's see here. SMCI. That's a semiconductor that I think you had me look at last week. Let me take a look. And this person's asking if it's a recovery or a retest. I mean, it's gone parabolic. It's likely not going to continue that. It's got negative divergence. I think it's going lower. See the divergence? All right, so this last move here, divergent high, and you don't have a bearish PPO crossover, but it's looking imminent, all right there. So look for that, and that will help confirm the divergence. And as of right now, I mean, I think they ask if it's a recovery or a retest. I think they're looking at this little trend line right here. It's so close. I would probably just tweak it. You know, if you have a trend line and they're so close, just, you know, I'd probably just go like that and move it down. And that's, I would say we have not broken trend yet. I do believe that trend break is coming soon. So that will be your sell signal on that one. And I'm going to add this as a short setup because it's a good setup. It's not actionable yet, but oh, I already have it. You break that, you're likely coming down to this more major trend line here. All right. So I like that as a short setup. It's not actionable yet. You break this trend, it would be actionable, and that would give you a move. Depends on when you break it or how it breaks it with a gap down or something, but potential 50% gain on a trade, I like it for a short. Just not yet. Airbnb and Chewy. Did I already get to some of yours? Sorry guys, I'm trying to only do one or two from each person, but you know sometimes I don't keep track of that. Airbnb. All right, so Airbnb. Well, I don't see any here. I mean, it's a divergent high right now. It's not confirmed. So you've got this move up here is on less momentum, but it's not confirmed. You still have momentum pointed up. So if it continues higher, you won't have divergence. So what I would kind of piece this one together and look for certain things. First things first, bearish PPO crossover. Look for that. If you get that, you now have divergence that's confirmed. Second, you've got a trend line here. Look for the sell signal or the break of trend. That's your entry on a short. And if that happens, then, you know, you're probably heading back down to this trend line down here, or, you know, even take out the recent lows. Because it could take a while, so maybe it trends down and takes out the recent lows, makes a new low, and yeah, that's how I'd probably set that thing up. So that's all I see on that. As of right now, still bullish. It's still bullish. And then the other one, Chewy. Yeah. Bearish. So you have a downtrend. That's trend still intact. You've got bullish momentum, but you also have bullish price action. So there's no divergence, no indication of a trend reversal, only just a correction within a larger trend. All right, the larger trend is down, and the correction is this kind of rally stuff. So I see, you know, that's all I see. It looks like bearish. Disney. Yeah, still holding that support level right there. Earnings coming up, so who knows. I don't like trading a lot of stuff in earnings. Sometimes I will. I did short Tesla into earnings. It wasn't a huge position. I didn't have a full-size position, and I was right on that one. I took my profit. But Tesla is sell the rip, guys. It is definitely sell the rip. I can pop that open here in a second. This one's still holding support, and I don't see any real, I don't see any change in that. It's just kind of holding support. Might need to develop a little bit more. I don't see much on that one. If I had to guess, I'd probably go bullish, only because you do have some bullish divergence. It's just not confirmed. It's just not my favorite chart, to be honest. So I wouldn't take a position. Calm. Okay. Let me look at Tesla real quick. All right, so Tesla, there's your negative divergence right there. Okay, and then we traded into that bear market trend line, downtrend. All right, there is another reaction, and it got sold into. Earnings came out bearish against expectations. I want to say mostly because the technicals were set up for bearish. All right, that's it. The news headline, they'll slap. What happens is the stock will sell down, even if the earnings are better than expectation. The stock will sell down, and they'll just come out with some headline, the news headline, as to why the market didn't like it. They'll find something, make it up, so that you watch and tune into their media programs and look at their stuff. So that's it. The news headlines just reacts to the price action. And there it is right there. So to me, with this negative divergence here, it's sell the rip. All right, we could rally back up, maybe fill the gap, maybe another test. I'd want to sell into that. And then the support is right down there. All right, so you come down to this trend line. All right, I want to cover a short down at this trend line. I don't want to be short down there. And then if you break the trend line, that's where I want to set up short for a longer swing target. But this could do something like this and then bounce, and who knows. It's not a swing trade yet. I think you can swing it down to this trend line, but that's as far as I've let it run until it breaks the trend line. And then at the same time, triple Qs is probably going to bounce. When I go back to triple Qs, if Tesla trades down to that trend line, triple Qs is probably going to be down at this trend line, and the buyers are going to be sitting there. So, Now, I don't know if we make another leg higher. We might, but all right. That is, so I covered Calm already. At least I believe I did. Oh, no, I guess I didn't. So we're looking at a ag commodity milling. Okay, so probably a de-inflation trade. Bullish divergence right there, and then this looks like a bullish falling wedge. I can kind of see it, but we'll see if I can actually make it. Yeah, like there, and oh man, sometimes grabbing these tools is a pain. There, roughly right in there. Yeah, we'll just go with that. Not the best top of the wedge. But I would, that's the best I can do. Bullish falling wedge, bullish divergence. A breakout would be a buy signal. So, and you're going to go fill that gap as, you got gap entry and gap fill are always reaction points. So there's gap fill and gap entry. I mean, it's right about there is the best I can do. So those will be reaction points most likely. But I would assume you go fill that gap. And the measured target of this wedge, you take like kind of the widest part basically, and it probably measure it for the breakout. If let's say the breakout comes soon, it's putting you right there. You're probably going to get close to filling the gap. If you're long, you don't want to wait for the exact gap fill though. Always step in a little early. At least that's what I like to do. So you get into this area, yeah, you take profit, for that long if you took it. Okay. Let's see here. I've already covered some from Euron, so I got to skip that one. Someone's asking about the bonds and what I feel about the bonds. I did cover that, but let's see if I think we had bullish divergence, or let me check. No, I still stick with, I think they're going higher. I don't know. Or the interest rates, which means bonds will go lower. We could look at TLT and see it's pretty much going to be about the same, I believe. I mean, you do have some divergence. It's right here, you know. That's a divergent low. It's just starting to form, but you also did get a rally right there. So, yeah, I don't, if bonds are going higher and interest rates are falling, it's probably because we're in recession and the market is, the market will probably have already had, another leg lower. That's what I would assume. With inflation where it's at, the Fed can't cut rates unless they have some sort of market implosion. So, yeah, that's what I think. So we got I covered Netflix. I'm kind of working my way down the thing. DHT or Val oil. Okay, well, if again, that DJP does have oil in that index, so that's a bullish chart. Let me look at oil futures. Looks bullish to me. I don't see any real change. This looks like it's just starting an uptrend on oil. This is just the futures, but you've got bullish divergence there, which showed up, really showed up back here. Bullish divergence. These are divergent lows. You've got a breakout, a back test, and continuing to move. Got to take out the 200. That'll be the next kind of breakout area, taking that out, but I think it's going to happen. And if you see that, then that's the first time oil was really over the 200 since, back here in August, almost a year ago. So, uptrend, correction, continued uptrend. That's the way I'm seeing these commodities right now. Until that changes, I'll just continue to view that. So then go into this guy's oil picks, or gal, or whoever this is, DHT. Well, this isn't oil. This is marine shipping. Maybe it's container ships of oil. But it's in the transportation sector. So, I don't know if this is oil tankers or what. The thing is, though, like oil tankers, if oil rises, you don't necessarily have, it's not always good for the transportation companies, because as price gets more expensive, if anybody's ever taken economics, you've got this thing called Marshall's scissors. It's basically a supply and demand, like a supply and demand X, and as price moves up, supply or demand moves down. All right, that's kind of economics 101. So if price is moving higher in oil, which is what the charts tell me it's going to do, demand should move down, and if demand moves down, you're shipping less oil, if that's what this company does. So that's the fundamental take on it, but I can't really make, maybe that's probably your trend line there, which would be a breakout. Slight divergence right in there, I believe. I don't know. Not my favorite. I don't have a clean opinion on that one. Let's look at Val. This is contract drilling. So this would be an oil play or a fracking play or whatever. And this would, you know, as price moves up, this probably would benefit. The best trend line I can, yeah, we'll go with that. Right there. Yeah, right in there. That's going to give me 3 reaction points. 1, 2, and that back test 3. So that's a breakout. Momentum looks good. I don't see, I mean, momentum looks good. And price action looks good. Looks bullish to me. Let's go with, we got like something right here. Go, oh, right there. This was support, and then you got another, there's 3. Bullish trend. That's it. Looks bullish trend. Looks like you had a little correction and continued higher. So buy the dip. That's what I would say on that one. You know, you come down to this trend line here that you buy there. It's buy the dip. You know, I don't want to buy it necessarily right here. If you want to chase the momentum, fine. But it's already up from this latest move 30% in just a matter of like a month. So I'd want to buy the dip on that. And it's got earnings coming up. So maybe they miss, they come down and hit this trend line again or something. I don't know. And then PLTX or PLTK. Never heard of this one. Package software. Okay, so tech. Bull trend right there. Negative divergence right there. It really made, you know, kind of an equal high in momentum on the PPO, but higher price. So that's divergence. You also have a bearish PPO crossover. If I zoom in on the PPO, there's your bearish PPO crossover confirming that. Actually, look at that. It didn't make an equal high. See that? If I really tighten it up, this new high or this new peak in the PPO is lower than the former one right there. So negative divergence on the PPO, and the RSI has it too. So just like tech, I think you head down to this trend line. I wouldn't want to be short here. I'd want to cover. And then if you break the trend, which I do believe will happen, then, you know, that's another sell signal. So I would like be shorting this thing or selling the rip down to the trend line, cover, probably get a bounce. That bounce ultimately probably fails. Break, I re-short and trend trade it to wherever it goes. You know, we'd have to, there will be reaction lows. So that's that one. Okay, AIG, that's our insurance one. What happened there? Huh. It's a big move down. Kind of a crash. Can't really make a clean trend line there on the COVID. This is COVID lows. On this one, so this is a little lesson in divergences. They do, most of the time they work out, all right? They don't give you an indication on when to enter the trade. And so when I talk about something with divergence day in and day out, because I try to do videos almost every day. You know, it can sound repetitive, and a lot of people say, "Oh, he's been saying this forever." Yeah, because that's the nature of, you know, this trading is I want to tell you guys about the trade before it actually plays out, and it could set up for a while. But see that negative divergence right there? So that showed up basically here. So all this price action is divergence, and that lasted for a couple months, about 2 months. And then it finally, you know, played out. And you broke support, and this is what you got out of it. So that's done. We're done with that. Now when I look at it, I don't see anything necessarily bearish. I see this uptrend right in here. Kind of mark that out right about there. You could be wedging, you could be doing this bearish rising wedge. I don't have divergence enough. Yeah, I don't really. Maybe it shows up now, but I don't have it right now. So look for divergence. Until then, it still looks like it's uptrending. So what I would do, this looks like it's in an uptrend. Earnings, higher risk. But if you start to see negative divergence showing up on your momentum indicators, I don't have it right. It's not there now, but if you start to see that, and then really, if you get a break, that would be your sell signal. That's AIG. Covered Tesla, Baba. Baba's had a messy chart in the last little while. But I'd have to be bullish on Baba, only because I have bullish divergence. I have a downtrend. It looks like I got breakout in a back test, so I'd have to lean bullish on Baba. Target, TGT. I wouldn't touch this one. I wouldn't be bullish. It's not a bullish looking chart. Not yet. You oftentimes when you have this big plunge, you'll have bullish divergence, and you do right there, and you got to rally. But I don't see. I think you're going to make another low. Maybe you come down on earnings, make a new low, then you have some more solid bullish divergence. Then you'll look for breaks of resistance or tags of support for objective areas to go long. Big resistance right there at about 139. That's where it was rejected. I think you're going lower. Check in with MA. Oh, MA, yeah. It still looks good. I still like it. I'm still short this. I'm underwater a little bit, but it's fine. Negative divergence, back testing. Still, we're just trading below. It is, we've just made a new divergent high too. This little cluster right here is a divergent high. I believe that's going to fail, and we're going to start to head lower. I don't see any real change in the technicals. You can look at Visa, and Visa's the same kind of setup. Visa has negative divergence here and a bull trend that it has not broken yet. Looks like there's big resistance right about 236. You have a little breakout above it, which is bullish, but with the divergence, it tells me that breakout's likely going to fail. So maybe on earnings, that might be the catalyst. All right, I'm going to do one more and then wrap up. So let me just scan through. I covered most of your guys' stuff, so hopefully you're finding value. If you haven't done so, you check out the course. Guys, the course isn't about getting every single trade right. It's about how to read charts, how to, find objective setups. It's not, my channel, I'm not going to be able to get every trade right, and I can't manage your own risk. You load up in one position on one trade idea I put out there. If it doesn't work out, that's on you. It's not on me. But the course teaches you how to look at charts, what to look for, keys, how to find setups, how to find trade ideas, and how to manage that risk. So there's all, check that out if you guys haven't done so. And if you're in the private member group, I'm always trying to put ideas that I believe will work out. I want to want to get 100% of my trades right. But if I could do that, I'd be sitting in a 300-foot yacht somewhere. Okay. One more. Starbucks. CCI. Is that Carnival? EXK. That's an energy company, isn't it? Oh, silver. These things are sometimes hard to chart. I don't want. Well, let's look. EXK. Can't make a super clean downtrend line, to be honest. I'll just have to go with there because I have that latest reaction on that one. This is a divergent low. All right, you have bullish divergence there, and you did rally. I don't have anything to go off of here. It just looks like it's in a continued downtrend until I see a change. I do have bullish divergence there. That might have already played out. You know, I need to see a break of this trend line or something to go off of. And then you'd want to look at silver. And just on that note, I'll cover gold. And then I'm going to wrap up. This is gold bullion. I haven't looked at this one for a while. To me, gold bullion looks like it's in a big bullish pattern. When I look at the weekly chart, this is what's called, it's a rounding bottom, or maybe you want to call it a cup and handle, but you've got this big rounding bottom. That's an accumulation pattern, and it's a big pattern because it's on the weekly. So this is, you know, a decade-long pattern, and this could be your handle, but ultimately, the next major buy signal comes above this breakout above 2077. All right, on the weekly chart, you need to see a big, strong weekly close, preferably without divergence. If you have divergence, that's going to put that into question. And then when I go to the daily, you've got I don't have a whole lot to go off of. It looks like an uptrend. I mean, I see like this uptrend here. Maybe it's a breakdown and a back test. This trend line is not that clean. I have to kind of clean it up, actually. See, I only have like 2 data points. I just don't quite have enough to feel comfortable with that trend line. So, I don't know. Big sideways pattern is the best I could go off of. And if you look at the miners, to me, the miners look like they're in an uptrend. I've got this support, support, support. Little breakdown below here, but quickly recovered with nice impulsive, price action. And that breakdown did have bullish divergence right there. All right, momentum was moving higher while the price broke down, indicating a likelihood of a false breakdown, and it was a false breakdown. So what the probability indicated in the charts came true. So there's so now it looks like we're at support right there. So looks like GDX is at support and we're going to rally. That's the best I could go. And then like Newmont, I was looking at that on Friday. I own some of this in a longer term account, but it to me looked like it was kind of at support right in there. So these miners look like it's by the dip as far as I can tell. They might have to sell off more, but just scanning through some of these, yeah, that looks good. I mean, they don't all look great. They're all different companies, but in general, it looks like buy the dip. So, okay, guys, that's all I got for today. So drop me a thumbs up, and I'll catch you guys on Monday. All right, take care.